Okay, so yeah, so the home construction is starting to rebound. This is second stage, first stage, second stage. So this is second stage, right? So the one of the themes that I want to talk about constantly today is like, there's two things we should be looking for. So one is we're looking for, like, remember the index stopped bouncing since October last year. So but the majority of the stocks didn't move until May or June. So really, like that 6 months, the initial 6 to 7 months is like kind of right off, because most people missed that, right? And really, not many stocks went up. It's mostly the major big caps, techs, right? But since May or June, we start to have this rally. So that's kind of like the initial rally that breaking out first stage base. So that's kind of like the timeline, right? So here, this one probably broke out earlier, the home builders, like it started breaking out in April, you see that? And then it moved up, and now we're in second stage base. And so now, recently, August, we have a few weeks of correction. And so now we're starting to build this second base, and so that's the first thing we look at. We look for stocks that are in stage 2, because that shows that those ones are the strongest one. And then we want to look for the ones that are breaking out of the second stage. Those are even stronger. Okay? So those are the two criteria I'm looking at when I evaluate stock, whether they're more of a leader versus not so much of a leader. And so right now you can see home builders are near a breakout zone, and at least at the sector level. So this is actually looking very good, because it's a nice flat base. It didn't correct too much. Also, it bounced back pretty quick. So this is very this is very promising. And so this is one area that I think, like, Toll Brothers is probably the biggest one that most people would look at, or that most people pay attention to. And you can see this guy tried to break out on Friday. You see that, and then you can see the relative strength. Basically, relative strength means like it's performing stronger than other stocks, right? S&P. So you can see the RS line has been climbing even faster, meaning this price movement is faster than the general index. So that's also another thing to pay attention to. It's like, generally, if stocks are breaking out right now, second stage base, their relative strength should be at new high. So that's what's happening to Toll Brothers. I personally don't own this one just because they have negative earnings forecast. So I don't like when there's negative earnings forecast, but for some people they don't care, because as long as they keep beating what their estimate is, they'll continue to move up, right? So like this one, you can see the most recent announcement, they beat it by 28%. But it was positive too, right? Like the actual numbers. But like I say, for me, I just can't buy every stock. So one of the criteria is that they have to have positive guidance in terms of earnings. But like I say, for some people, they're fine with that. So, but it's still like I say, very strong sector overall. Like PHM. Let's see, PHM, Polity Group. So this guy hasn't break out yet, but you can see it's building the second stage right now. So I think they all have similar pattern. But you can see like the slope of this red line, which is the 50-day moving average, is like 45-degree angle. So that really tells me this is a very strong group. And it's definitely if you like this sector, it's probably a good area to get in. Yeah, so that's one area. So let's look at the index for a second, like because I feel like this is very important. So it's been like more than a month. We had a video session about the market, and I don't remember exactly when, but we did talk about this uptrend here on the Nasdaq, and we have this 19 weeks up, and from here to here, and that usually tend to be a good rally usually lasts like 4 months, 4.5 months. That's at least according to IBD research, and we saw that back in 2000. Right here, we had this run here. This one lasts longer. It was 23 weeks up. And then it corrected, right? It corrected, I can't remember, close to 14% or 15% on Nasdaq. And then it ran again for another 15 weeks up. So that would be like the next rally. So we are very similar trend right now. We had this 19 weeks up, and then it started to correct, you know. And I think it didn't drop. Like, I don't remember how much it dropped. Probably like close to 10%. 14,446. 13,161. Yeah, pretty close. Let me do a quick calculation here. 14,446 minus 13,161. Okay, yeah, this is much shallow, right? Like not even 9%, 9%. I think the QQQ might drop a little bit more, but the Nasdaq itself, like not even 10%. And now we have two weeks of bounces. So that's and you know we have that's pretty strong. And you know you can see the slope is like pretty strong right now. So that is really like good. Like I'm pretty sure we'll probably have a digestion week or two coming soon. You know, I don't see this slope holding that strong. That's pretty strong slope. You know, that's more than 45-degree angle. So probably we'll have digestion week or two coming up soon. And hopefully after that it'll take off, right? So like, you know, kind of build a longer term trend like this. So we'll see. Like this one, this is exactly what happened. You see 1, 2, 3 weeks, and then it went sideways for 4, 5 weeks right here. See? And then it took off again, another 5 weeks up here, and then it went sideways, and then we have like maybe 1 or 2 more weeks here. That's it. So that's generally what happens on the index level. So let's see if this is gonna hold. So that's Nasdaq. Basically, 19 weeks up tell you like it's probably a good time to sell into strength. And I did start selling that time a little bit. Like it wasn't as aggressive, but yeah, I start selling. And then by the low here, I was 40% equity and 60% cash by the low here. So overall, I was able to take most of my gains, that especially the big ones, and then hold on. And the ones that I hold on to mostly were industrials, and even industrials eventually gave up. So that was a pretty like that 3-4 weeks, depending when you start counting. Let's just say 4 weeks. That 4 weeks of correction or pulling back hurt many stocks. Tech stocks for sure, but even the most safer side like industrial stocks, like eventually they just gave up. You know, so that part hurt me a little bit. And then there was a day that happened. I don't remember which day. This was probably like not this week, but the week before. There was one day where the yield, the 10-year yield. So here, so this is I have it. I already charted this, so save us some time. So 0TNX is the 10-year yield, right? And there was a 2 weeks ago, roughly 2 weeks ago. I don't remember which day. There was a day where the yield went up. Because normally what happens is like the yield goes up, and then the Nasdaq goes down. And then there was one day where the yield went up quite a bit, like I can't remember, like you know, but it was significant enough. But the Nasdaq didn't go up. I mean, didn't go down. And that was the day I realized that something has changed. And so that was when I started buying back stuff. So roughly 2 weeks ago, I don't remember which day. And then since then, I start seeing more stocks bouncing back, and that's when I start to aggressively start buying again. And so for the last probably close to 8, 9 sessions, I wanted to buy even like the week before, like during my vacation still, but I just didn't have the time to buy as much as I want. But as soon as it came back, I started buying. And then when I saw that yield thing happen, I realized that Nasdaq no longer followed that trend. And that's where I realized that maybe text, and you can see this, that even, I'll show you, it's probably harder to tell from here, but if I go to Nasdaq, right? So Friday, what happened? Friday, it gives up 0.02%, so which is very minimal. It was a reversal, but it gives up by the end of the day, it gave up 0.02%. If I go look at the 10-year yield, look at this bounce, right? It bounced like almost 1.95%, almost 2%. But the Nasdaq only gave up 0.02%. So this tells me the Nasdaq is no longer following this trend, right? Normally it would be like down big if if 10-year jumped this much, Nasdaq would like, right? So the correlation is no longer as strong anymore. And that gives me confidence in tech, like Nasdaq type of stocks, especially like, tech and growth stocks. So to me, this is a very good sign. So again, just to reiterate what happened in the last, many weeks, the U has went bazooka. It basically hit a new high, and then it reversed since then. But you can see it's still holding try to hold very strong, right? Even after it undercut 21. So this part right here, Friday's rebound is so strong. Like I say, I feel like the 10-year yield is just continue to gonna give the market a hard time, just because it didn't just crash, right? Like that's what you want to see. You want to see it just give up, but it's not. It's fighting back. But the good thing, like I said, is that Nasdaq is no longer reacting as strong. But that doesn't mean it won't correct. Just so you know, sometimes there's gonna be those bad days. Okay, so there might be if this thing if this thing move up, maybe Nasdaq could correct like 2% that day. So because this is the part that David Ryan is most fearful of. He watched this constantly now because he say just because of how correlated they are. But like I say in the last in the last 2 weeks it has started to correlate less. But still it still impacted Nasdaq, just so you know. But it's just it's not gonna be as easy peasy is what I'm trying to get at. But the fact that Nasdaq has bounced back so strong gives me confidence. And to me, and I'll tell you another thing we'll look at when we start looking at stocks is that from my perspective, I don't just see Nasdaq stock going up. I see like every sector going up. So to me, at least that are growth oriented. To me, that's a sign of bullishness. A lot of people didn't pick that up. I don't know why, but for me, I see that at least at the price level. Maybe the volume is not all there, but at the price level, I see many stocks moving up. Like right now, just so you know, I'm more than double my position right now since the first rally. So I'm very aggressive right now. And the reason why I can be this aggressive right now is because I feel very confident. Like I said before, about the stage 2 base. So if you go back to Mark Minervini's book, stage 2 uptrend is the strongest uptrend. The reason why is because by this time, most people, at least the smart money, they already believe they might have missed the first one, right? The first rally. So for example, stocks like NVDA and all this stuff. But this time, they're not gonna miss it. So this is when the real money are starting to pile in. And that's why the second stage base is always stronger than the first stage base rally. So that's something to that's why I also feel like the reward is much higher now to have more aggressive risk. On a side note, like Jim Roppel, he's super aggressive. Like he was saying how much he's buying. Like he's on margin and all that stuff already. He's super aggressive. So that's the status of at least where I am at and where he's at. David Ryan is more conservative. He still thinks the 10-year yield is going to be a problem for the market. So that's that. But he like I said, he was right about the shorting and stuff. He covered his shorts even on Friday. He said, this week on Wednesday or whatever. He started covering his short after the. So Tuesday we mark a follow through day. That is a very strong day right here. Basically, why not only we see higher volume right here, you can see down here, higher volume, rebound. It was a strong 1.74% up day. It rise above the 50-day, and that day, why did that happen that day? It was the JOLTS data. So if I go to my notes here, yeah, the latest JOLTS report, which is the jobs opening report, and basically it has dropped to 8.8 million in July, much lower than the forecast of 9.5 million. So that's a big difference. And then the previous one was also revised down. Now openings are now back at levels last seen in summer of 2021. So basically, this is like saying that, hey, the job market is basically where it's at in 2021. So this is very good news, right? Because now the Fed has done its job. So which means wage inflation is unlikely to continue to be, going up that strong. It's probably, if anything, it probably start to come down. And so the inflation part for service and wage stuff is probably not going to be as significant going forward, So this is why the market reacts so strongly that day. And then the yields have, again, that's another big thing, right? The yields have really started to tumble, 2 weeks ago. And again, I don't know how the market knows this, but it just did it, and then the market reacted to it, right? So, yeah. And like I said, there was that, I don't know which day. It's one of those 2 days. It's probably this day. This day right here, because I remember so clearly that day. It was the day where the yield went up, hit all-time high, and then the Nasdaq did not go down. That was when I realized something has changed. So anyhow, so that's the reason. And then we have that follow-through day, and on Tuesday, and I say I was starting to buy, not as aggressive, but that day I was very aggressive. That morning, I remember. I just see a lot of stocks moving, right? So that's the reason why I was just being very aggressive in buying. And then I continue to buy even up to Friday. But I'm pretty much done buying. I'm probably I'm done buying right now, because I pretty much used up most of my cash now. So so now is, we probably, we'll probably go into sideways movement for 1-2 weeks. Maybe we might have another strong week, I don't know, but let's see what's gonna happen. S&P very similar. It's above 50-day. And that's the thing, right? Will it come down and test the 50-day again? There's a high chance of that. Generally, the market always like to retest key levels one more time, so that's something to be aware of. It's just one of those things. Dow, like I said, Dow is much weaker than I thought. You can see even on Thursday, it dropped all the way down to the key. So again, Dow is already testing its key moving average. So, so the last one is Russell. Now, Russell is also obviously the weakest index of all, because it went all the way back down to 200-day recently, but it has bounced really strong. Look at this. This slope is very strong, right? And this is the part I like, because I'm more diversified as an investor, so I own a lot of smaller cap stocks. So that's whenever this goes up, my portfolio usually goes up, even stronger than the index. So, but this is the key area to look for, is around 2000 level. Jim Roppel says, if this is the one area that hasn't shown strength, right, this whole year. If this thing breaks out 2000, he said the whole bull market is going to rip. Okay, so that's something to pay attention in the next month or so, if this is going to happen. But right now, it's bound, this week is just bounced so strong, so to me, that's a good sign. Basically, it went from 200-day to 50-day. That's a very big technical improvement in 1 week. And to me, I feel like the momentum. And Friday, we clearly saw that, right? It was leading the market, because it was the only one who's up 1% or more. So we, if this momentum continues, that will be a really good sign. We'll see. It's hard to say. Rate, the odds for a quarter point hike has, it says here, this is on Tuesday, probably falling even more after Friday's unemployment report. And yeah, because we'll talk about it in a second. But basically, September is supposed to stick, Like I think it's like over 90% chance like that it'll just stick the same rate. And then in November, initially it was quite high. I think it was initially like it says here, it was over 50% that they'll raise the rate. But now it has fallen since Tuesday. But I think Friday it probably even fallen more because of the job report. Thursday, personal consumption expenditure. Again, this is another inflation measure. It came in as expected, so that's a good thing. Let me see. On Thursday, yeah, so nothing too much happened. Friday, yeah, so again, the Friday monthly job report gives the latest evidence that monetary tightening has been working to cool inflation. So it is working, right? So it's happening. So whatever the Fed has done is working. So, you know, as time goes, it'll probably continue to work. So here it says, the gain by small caps certainly was not without reason. Friday's job report showed an unexpected jump in the unemployment rate to 3.8%. So that's, to me, it's a pretty big jump from 3.5 to 3.8 all of a sudden. Because it was around 3.5 for a long time. Payrolls grow more than expected, rising by a net 187,000 jobs, but July's figure got a downward revision. Average hourly earnings rose less than expected. So that's the good one, right? Like that's where the earning, the hourly wage is not going up. Yeah, so that's all good news. So so again, for the market, I think it's starting to, you know, sense that maybe the inflation thing is near the end of the road, right? At least you know, trying to achieve the target that the Fed wants, you know. So that's good news. Yeah. So I'm going to jump to the market trend accumulation template here. So here, so we were in correction mode, and then Tuesday we have the confirmed uptrend, and you can see the accumulation on the stock side is starting to grow. It's not aggressive. Like normally, if I see above 300, that's when it's very aggressive. But you can see it growing really slowly, but nonetheless, it's still up. And then on the industry group side, how many groups are going up? You can see it's starting to go up again. Again, not aggressive, but you know, not bad. And then on the breakdown, you can see like techs are pretty strong, industrials are okay, and financial surprisingly has gone up more too. So those are the few surprises: financials, industrials, and tech. Retail wasn't as strong. Health wasn't as strong. Commodities okay, like commodities. So yeah, so you know, commodities okay. It's not like, it's probably like the average right now. And commodities are, yeah, you know, with oil near 85, it's like pretty strong. We jump to USO for a second. So David Ryan is probably most like, because he's a little bit more conservative right now. He thinks the oil is posing a big challenge to the economy, because if the oil prices keep going up, it could be detrimental, right, over time. So right now you can see the oil just broke out this week. That's really the probably, to me, that's like, you know, that's huge news, you know, because this could have an impact on inflation because it's the biggest component. So that's why I don't know, like it's kind of weird to have, you know, after the bear market, you know, it's kind of weird to have oil going up and the other sectors going up at the same time. So we'll see what's going to happen. But this is a big breakout. So yeah, like, you know, the deep move big, right? The Chinese stocks and the oil stocks. They both, you know. So let me just type this out. Breakout and Chinese stock. Those two are the biggest movers I saw this week. We'll look at some of those stocks in a second here. Every day I use IBD and I track the daily mover, like on high volume, and these are the stocks that are moving high volume every day this week. And so I track them, and those are the ones I focus first. You know, I don't know how IBD screened this, but they do a pretty good job. Because the volume, it takes into account the volume, and Jim Roppel uses this screen, like that's this number one go-to screen too. I'm actually surprised, but anyhow, so it just ends up that we both use the same screen. And this screen, like I say, as the day goes on, the volume changes, right? And so it actually estimates how much volume percent like higher than previous day and so forth. So it's a very relevant screen because of that, right? Like because you want to see what stocks are being bought, right? So I only focus on the up ones. I don't focus on the down ones. But so these are the stocks, and ACMR, semiconductor stuff. So the red ones just so you know what I'm coloring. Like I know there's lots of coloring stuff, but the coloring, like the red one on the day, basically means it's usually 15% on lower earnings guidance. So that so for me, like I have a cutoff line. Like usually it has to be above 15%. Otherwise I'll be buying every single stock, right? So I need to make some cut off, but doesn't mean they're not a good stock. It just means they're, they just have lower earnings guidance. So Adobe, really strong. I almost, like, I've been watching Adobe quite a while now, and I feel like this could be a huge leader. It's very consistent since here, like this, since right here. It has been very consistent. Goes up really strong, built a nice tight base, and then this recent base even tighter, and now it breaks out. So this is what I'm talking about, right? Like you want to find, this is still first stage base, because this is the big cup right here. So this is not stage 2, but but this one is slightly different. It's probably not the strongest, but to me this is pretty close to strong. So I like Adobe, and they have done a lot of revamping their products using AI. So that's one thing I really like about this company. Yeah. So I feel like AI, because a lot of things they do is creative, so I feel like AI can really help on that front, right? If it can do it, I don't know if it can, but I assume, let's say they can do it, then it can speed up a lot of the work that people do, So I really like Adobe. Autodesk, not bad. ANET, yeah, ANET is definitely bouncing. Let me just take a quick look. So ANET is probably one of my favorite stock right now. The reason being because this was one of the few stocks that wasn't correcting the last few weeks. Like it did right here. That was a really bad week. I don't remember what happened. But then this week it started to bounce, and so it bounced. Like to me, it bounced before most stocks. To me, that's always a strong sign. You can see the relative strength really strong right now. So I really like ANET because of that big bounce. If we go to daily chart, probably see it better. Yeah, so this was okay. So this was like coming down as the earnings report happened, and then it jumped really big on the earnings report. I don't know why it has all this like very volatile swing. That's the only thing I don't like about it. But overall, this stock is like very strong, right? Because you can tell from the relative strength. So I really like this. But I've been watching this stock for a while now. So it's like this is stage 2 right now. So this is good, right? So this is like completely satisfied the criteria I've been talking about. Stage 2 base breaking out, right? So this is like one of the stronger ones. I like this one. Okay, so this stock I have to talk about because I don't know how I missed it, but this is probably like a superstar stock right now. This is like this is almost like a SMCI thing, right? Like look at this trend. This is like a 45-degree angle chart. This is now even stronger than 45-degree angle right now. Like it's like doing a climax run right now. It's like this slope. It's a small cap stock. It's getting bigger, 15 billion. Like I say, I don't know. Like I've heard of this stock before, but this rally I completely missed it. It's not that I missed it. It never even built a base or anything. It just keep going up. Probably this is the last time you can have bought it. It was before the earnings. Since then, it hasn't given a chance to buy it. I mean, you can buy around 10 day, but I don't usually buy around 10 day. you know, it's too small of a pullback, you have a bigger risk of it failing. But it's still working. It's a really strong slope. Yeah. So that's app. APPF very similar. The sound actually they're almost similar name, right? Similar symbol. I mean. So this one is also very strong. You can see. Okay, so this is stage 1 right here. I like to draw the lines to tell me this stage 1, and this is now stage 2. So this is perfect. It just broke out. So this is good. Right, so this is stage 2 now. It just broke out on this week. Look at the volume, right? Super high volume. This is exactly. So again, this is very important. When it breaks out, you always want to see the highest volume ever. Now it doesn't always work. Like especially at the end of a bull cycle, it usually that's when it actually collapse. But in a normal, like during the bull cycle, usually it's very confident to see that, So every time it breaks out, we like to see like right here. Let's see. We want to see higher volume. So this one is actually not higher volume, but this one is really high. Look at this. This is the largest volume ever. So that, because usually what happens is that it tells you that you can see another evidence here, right? It wasn't just one day thing. You can see there's 4 days of accumulation right there. So institutions are buying this stock, and even as people are selling, so that's why the volume is so high. So that's a good sign, right? So I like this stock. It's a really nice cup. Only 16% correction. So most of the bays are pretty small because the correction is so short, and also the rebound are so strong. So that's why they're really short bays. Usually you want to see longer bays, but minimum is like I said 5 to 6 weeks, depending on how deep the base is. So that's really good one. CFLT database stocks have lower guidance. CRM. Okay, so Salesforce. Yeah, Salesforce report this week. I think they did well, and they bounced. So you can see this base here. The only reason why it still stays stage 1 is because there's a base here, and then this base undercut that base, so it resets. So that's the IBD rule. They reset it, but you can count this as base 2, really. Yeah. So usually when it undercut a previous base, it even more power as it moves up because all the weakest holders are gone. So yeah. So this is, like I said, I like Salesforce. They also can do a lot using AI for their customers, to help with sales and all that stuff. So I think they'll do really well. Yeah. CrowdStrike. This is not as strong of a stock, but it's starting to come back. But I won't look at it. If you want security stock, that's one of them. Datadog still correcting. Duolingo. Let's look at Duolingo. I like Duolingo as a company just because they teach people how to learn language. And stage 1, here's stage 2. So now this is stage 2. It hasn't broke out yet, but it's coming. So let's go to daily chart because it's really hard to see on the weekly chart. So here you go. This is probably the big breakout line here. Hasn't happened yet. So we want to see when it breaks out. You already see. You see here's the interesting part. You already see accumulation happening even before the big breakout. So hopefully it continues, right? So that's usually what. But this is a precursor. Like this high volume buying. That's usually a good sign. So Duolingo, still look at how many times like I've tried this, right? It just fell and fell and fell. So we'll see if this time it will work. All right, that's that one. Google, yeah. It's funny. Like everyone's talking about Google now. Like it's funny, like because it's hitting new highs, right? Like it's hitting new highs. Broke out of this second stage base. So this is a leader, right? That's my criteria. Like how do you define a leader? The stocks that are breaking out of stage 2 base. So this is a leader, and we're gonna look at all the big 7 stocks, but you can jump to Microsoft right now because where is Microsoft? it's still under 50-day line. So all of a sudden everyone's like, because those are the two AI, software, right? And for a long time, Microsoft, has been leading Google, and now all of a sudden it's reversed. So people are saying, oh, maybe Google is going to come up with better AI on their search and all that stuff. So it's completely reversed the first half of the year. You know what I'm saying? So HubSpot is always been a consistent lead, like winner. Let's see. Yeah, it's building second stage base right now. So this is first stage. This is second. It hasn't broke out yet. So this one, again, I think, like I said, if you want to differentiate stocks, I would say the ones that are broke out already are probably the stronger ones. But doesn't mean these guys won't move. It's just not as strong as those other ones. Intuit, pretty good too. IoT, I think it report this week, and I think it did well. Yeah, it did well. Look at that. So this one is stage one, stage two. Okay, this one it reset. Interesting. Again, I think it reset because this is technically a double bottom base, but I don't know. It probably shouldn't have reset, but again, I don't know what the algorithm is to reset. But usually, if it undercut a previous base, it reset. But in this case, I don't know. Maybe it didn't treat it as a double bottom. That's why it reset. But if you count this a double bottom, then it's definitely stage 3 base. So some stocks are even more advanced, right? So this is stage 3, like in my opinion, this is stage. And this guy broke out, of the double bottom. So this is right here, see, and this is exactly what happened when it breaks out of a base.
Wow.
High volume, right? Close at the top. Those are the things you want to see. High volume, close at the top, right? That's exactly what you want to see. So, yeah, I like this stock. It's volatile because it's I don't know, it's more volatile than some other ones. But this stock has been moving, and this is an IPO, so in the last year or two, right? So it's like a brand new stock. Not many people have heard of it. So okay, MongoDB. I think they reported too this week. They did beat earnings. So here you go. So this is stage 2 base now. Stage 1, stage 2 hasn't broke out yet, but this was a lot of people consider a leader, just because of how it moved last time. You can see how it moved. Like it moved like almost 10 weeks up, except that 1 week. So who knows? This could do it again. It could go 10 weeks up again. You never know. You never know. So a lot of people pay attention to this stuff. Meta. Yeah, Meta took a while to move, but I think it finally moved on this week a little bit. Not as strong as most people want. You see, it's like it's still under the 50-day. For me, I don't like if the 50-day is sloping down, and if it's under it, usually I will be more careful. But if the 50-day is moving upward, like it's still sloping upward like this, then I don't care about that one. I will just look at 10 and 21 days. So it broke that, and then so this would be my I would buy here, right? If I like this stock. But right now, on the weekly chart, you can see it's clearly still sitting at the 50-day line. So it's not as strong as other ones for sure, but it is trying to make its way back. Yeah. So this is stage 1. If this becomes a base, then there was stage 2. But this one's obviously have more risk because you have to understand, right? Like I also look at it from a relative standpoint. Like this week is a powerful week. Any stock that doesn't show strength or superior strength, I almost don't want to consider anymore. Even if it was previously a leader, okay? Because that's the thing. Every rally, things changes. Some stocks will continue to maintain leadership. Some stocks will come from a weak leadership to suddenly the strongest leadership. So you have to kind of pay attention to those shifts. Because some things may have changed, and analysts look at things maybe something differently. So right now, Meta it's kind of in the middle, right? Like it's So I can't tell if it's like has leadership, but right now obviously hasn't broken out and it's not even near the high. So I wouldn't consider this the stronger one, you know. So okay, Monday. Yeah, Monday. You know, it has gone sideways for a long time now. That's interesting. Again, this one moved like 4 weeks up really strong, but then it kind of ran out of power, ran out of juice. And a lot of people think this could be a leader just because like a lot of people use their software. Even IBD people use their software. So, you know, we'll see. But you know, this is really still first stage base, so it hasn't moved as much as people hope. That's one thing. So again, like for us as like investors or traders, you can only go by what you see, right? You can't hope, you know. You can't trade on hope, you know. So if it's not gonna move, I would not consider this a leader as much anymore. MSTR. This was one stock I did well previously. Yeah, so here's the previous base. It broke out of this base, went up 37% from the breakup point. Like, it doesn't look like it, but it went up 37% in like a few weeks. And then now it corrected. Now it's building another base. So now, again, if this becomes a base, then it will be considered stage 2. So now it's rebound. But on Friday, it reversed a little bit. So that's the negative there. So it's still an up week. So volume is starting to dry up. So that's exactly what you want to see. So we'll see if we can bounce from here. But, you know, it's still very far from the top. So again, okay, NCNO. This one, it's newer name to me because I never paid attention to this one. It's called Computer Software Financial. This group is starting to prop up lately. Like Intuit is in that group. There's a few other names. Again, this is not the best chart, but it's starting to move. That's the interesting part. And it was a very strong week for this stock. I think they report new earnings. We'll see if that momentum can continue. Yeah. So it did pretty much break out from the trend line this week. Now, okay, ServiceNow, definitely one of the possible leading AI stocks. I like this stock a lot just because it's a big cap, and also, you know, kind of like NVDA, right? It's a big cap. It's liquid, tight flat base. Hasn't broke out yet, but it's starting to near the top now of the base. I like this stock. RS line, look at RS line. So every time I see the blue dot, I pay extra attention. Yeah, because relative strength is so important to determine who's the leader. So okay, so NTES is one of the Chinese stocks, so let's look at it. Yeah, so this guy was the first stage here, and it didn't quite make 20%. So that's how they count, right? IBD counts based on if it makes 20%. It didn't make that 20%. Start correcting again. So this doesn't count as stage 2. But you know, yeah, it doesn't count as stage 2. But it's bouncing, and yeah, we'll see if it runs. Like, this stock is a computer gaming stock. NetEase in China. So yeah, Chinese stocks are pretty strong right now. Yeah. Okay, so that's NetEase. NTN next, another stock that probably not many people pay attention to. It's called Nutanix. So I like this run right here, very strong run. And then here, you know, it corrected, and then here it's starting to tighten up. This is the, you know, it went from here to here, and then it tightened up even more right here, and then it broke out on high volume, on earnings basically. I think they reported, yeah. So breakout, yeah. So we'll see. Because so one of the things that I like to do is that stocks that recently, like especially when a rally starts, the ones that have reported earnings are usually like the ones that have less risk, right? Because now you don't have to worry about this stock for a while, you know, in terms of earnings news and something. Unless the only thing that could happen is like they have secondary offering that could, you know, create too much liquidity and the stock will go down. So that could happen. But in general, yeah, like I like stocks that break out on earnings and the rally just started, because that means they might have more room to go. So I really like that. NVDA. Okay, so this is another Titan. So NVIDIA, like, look at this, right? Like last week, it make new high. Like it didn't even take that long. Like in 2 weeks, they make a new high since the bottom. So that's really, really powerful. You know, everyone knows this is the leader in the market. Everyone knows. Oh, I think that, yeah, they make new high. When did it report? Okay, I'm just trying to remember. Okay, so here it reports, and then it make new high, and then it pulls back. And then now so this is the big number, 500, right? So 500 is gonna be, you can see how many times, like that's 4 times now. 1, 2, 3, 4. 4 times now. It's trying to break above 500 and close above 500. It hasn't done it yet. But if that happens, I think the tech stocks will move, right? Because NVIDIA is kind of like a symbolization of all the tech stocks. It's the leader, right? So this is what I think. If this move out, then the bull is on for tech. Okay, that's what some people say, including Jim Roppel. Does that make sense? So watch for NVIDIA above 500. He mentioned. It's also psychologically, right, a round number. So usually they have significance. So watch for that above 500. Watch for Russell to break out above 2,000. That's another big psychology number. And then, yeah, he owns NVIDIA, Lee, Celsius, and VRT. Those are his big 4 right now. Yeah, we'll talk about that. We can jump to it right now since we're talking about it. So Lee Auto. You know, the Chinese stocks are really on fire this week. Like, we just can tell the strength. Maybe the volume is not as strong as some people hope, but the price action is strong. So this is this is first stage, right? I don't know. Oh yeah, right here, stage 1. So this is probably gonna be a stage 2. So that's, like this is already a new high, right? So again, if it breaks out here, it's gonna be powerful rally. So this is like, again, another reason why I feel the market is so strong. So many leaders are just either near new high or just ready to break out, and those things are gonna help move the market higher. So that's really good. Yeah, that's the Celsius is very strong. Like first stage, it went sideways. It looks like it didn't do nothing, and all of a sudden after the earnings it just took off. So chart is very tight on the weekly chart, but here you can see better. Look at the move, right? So from 150 now is near almost 200, not quite yet. So probably at 200 it'll probably like rest for a bit. But it's a very big move in like 3-4 weeks here. Well, remember, this is while every other stock was correcting, right? So that's what Jim Roppel said. Like, this is relative strength is just through the roof. You can see here, it's just constantly, like, and this is the slope right now. So it's very strong slope, very strong, potential leader, right? Celsius. Monster is this is 14 billion cap. Monster is the bigger one, 59 billion cap. And look at what Monster is doing. I tried this stock many times too. It's just not working. So what does that tell you? Like, this is the interesting part, right? If you're looking at Celsius and Monster and you're like, who's going to become the giant here? Well, Monster is already the giant, but Celsius may take over and become the giant one day. And that's what the market is saying, because this guy just won't break out. Instead, it come back down every single time. So look at how many times I tried Monster now. I think I give up. This is it. Maybe as soon as I give up, I'll start to move. I don't know. But Celsius, look at this. It's just easy hold, right? You don't have to do anything. You just buy it and you just hold. But Monster is not moving. So, but these two are the bigger drink makers, right? So, but Celsius is looking really strong. And again, this chart right here looks very tight, but actually the movement is pretty big. Like, this is stage 1. This is like a few months ago. If you bought it, you're up 59%, which is probably pretty good. So that's Celsius. So the last one he owns, I don't know too much about this stock, but it's also on my radar. But I couldn't get in. Every time I want to get in, I just couldn't find a pullback that's strong enough to lower my risk. But it just won't give you much chance. It just keep moving. And look at how many up weeks this is. Like you only see 1, 2, 3. Like even those 3 weeks down are very small, right? So these guys apparently they help the data centers, and so because of the NVDA stuff that's happening, everyone's building data centers. Jim Roppel is saying they need like electrical power equipment to help them cool off those data centers, and this is the big benefactor of that. So that's why this stock is like already at new high. It's like a leader. Look at this 50-day line. It's just like crazy. It's like 50 degree, 60 degree angle almost. It's just crazy. So this is another leader. Like you don't even see a base because it doesn't even form a base, other than the initial base here. So this is super leader. So yeah, when I say stage 2 base, this is probably the exception to that rule, right? Because there's some stocks are so strong they just won't even form. Like what happened this recently? It just like pulled back slightly while other stocks are correcting, and then it took off again. So that's how strong this stock is. It just won't even correct much. I was hoping it correct more, but it didn't. It just couldn't, and I didn't get in. Jim Roppel did. He added more shares. I don't know when is his initial position, but yeah. Anyhow, so that's a strong one. So let's jump back to here. Okta and other security stocks. So some of the security stocks starting to move. Oracle is a good stock. It just have lower guidance, so it's on my list. OTEX, another database stock. OpenText. Shopify. Okay. Shopify announced a big deal with Amazon, right? This week. So I think they will see more momentum going forward. So stage 1, stage 2, this is stage 3 now. So that's even pretty strong, right? Because every stage means it had went up at least 20%. So that it's pretty good. This one is deeper, but it found support at 200-day. So yeah, really strong week. Look at how much it ran this week. SMCI again. It has lower guidance, but it's still one of the strong leadership stocks. It hasn't moved as much as I like recently. You can see, I don't know if it's running out of power or juice. You can see my trend line here. It should be breaking out by now, but it hasn't. So that makes me worry about this stock, right? Not that I will own it, just because, like I said, I don't like buying stocks that have lower guidance. But that is something that to be aware of if you want to buy this stock. Splunk keep coming on the screen, which I think look at this, right? Yeah, it just keep coming on the daily screens, and it hasn't moved as much as previously, but right now it's moving really strong. Like right now the slope is like vertical almost. So and that's what happens. Like that's what I was saying earlier, right? Not every stock will continue their leadership in this rally if this is becoming another big bull rally for the next few months. And then there's going to be ones that are lagging and all of a sudden become a leader because maybe something changed in their recent earnings guidance and stuff, right? So this could be one of them because it just constantly come on my screen. And right here is a very tight, like this is the base, and then this got tighter, and then now it just took off. So Weave is a computer medical stock. VMware, I like VMware. It's it's another giant. It's new. Yeah, it's already like trying to break out to new high right here. Like this is really long base if you count from here. So if it breaks out, like I think this will be very strong. And I like this stock because like from first base to here, like it ran really, really strong, right? So now I put this another base here. This is another flat base. So this is second stage base now. So if this guy breaks out and out of this long-term high, that would be very bullish. And then look at this volume. Look at it. Look at the sell volume. No one wants to sell this stock. Look at that, right? So I really like VMware.
Wow.
Yeah. So there's some stuff that is not the big seven, but they're pretty good. Workday is doing like very strong to you. So this one again, like it didn't quite build a base here. This is one of the weird stock, like because it just does the ascending. They call it ascending bases. They go up, build a small base, go up, build a small base, go up, build a small base. Like it never formed any big base. Right here you see it didn't even form a base this time. Not even 4 or 5 weeks. It's like 3 weeks down. That's it, and then it moves again. So this is like Workday is like it's probably a kind of like a buy and hold stock. It's like it just move in this channel, right? Yeah. So we'll quickly take a look at the other big caps. So let's see, Tesla. So Tesla has moved back up. This is second stage base. Hasn't break out yet. Found resistance on 50-day. This is worrisome because didn't they announce they had new Model 3 in China? But they also announced they're cutting prices, right? Yeah. So that was probably the reason why it went back down, because it was initially up and then it went back down.
Yeah, heavy cut price, like almost 25,000 down on Model X and S.
Oh yeah, Model S, yeah. So that's again, the investors are starting to worry about their margin. Like they already worry about it, but now they're even more worried because they just keep cutting, and so yeah, this stock is not as strong as I hope it should be at this point. But nonetheless, it is in the second stage base. It's just a matter of whether it'll come out of this base, right? And right now it's struggling at 50-day because it found resistance there. So I'd be a little bit more worried. And if I were to draw a trend line, this would be the trend line I have right now. Whether it can come back and push back above 50-day, or it just continue to go down again, right? So that would be the worry there. So that's Tesla. Apple. So Apple has some news conference coming. Google as well. This one is starting to move up. Again, this is this probably should be second stage base. It didn't draw this one. I don't know why. Excuse me. But yeah, it's looking good. Amazon, similar type base, coming back up. Looks really good. Yeah. Is there any? So Enphase, like the solar sector, is the worst group in IBD. Out of all the IBD groups right now, it's like ranked last. And I don't know what's happening with that group. It just couldn't find its leg. Every time it moves up, it comes back down. Every time it goes up, it comes back down. You can see, right? And Enphase is probably the worst of all of them. Like I don't know what's happening. It just couldn't like look at this volume selling. Look at this. Like it shouldn't be like this, Like this is scary, man. Like look at this volume selling. Like, this is like someone is selling big time. And that's the scary part. Like even you can see all this time it jumps up and then comes back down. Like of course this is like around earnings time. Again, this one is around earnings time. So it just looked like that whole industry, just continued to go down. Like the other one, the number one stock in that group is First Solar, and even that one, look, I have this trend line. It just couldn't go. Like on Friday, it just couldn't go. Like someone just sells it, and yeah. And this is the best stock in the whole group. So Array is something that has moved, but it's not on my radar because they have negative earnings guidance. So for me, it's not in my list to watch because of that. But it has promise, right? Like it has good promise because it has broken out. This is one of the few stocks that are in the solar group that even showing strength. Like there is some accumulation, you can see that, right? But Enphase just is the opposite, man. There's no accumulation. Distribution is all the way. So this one looks pretty good. But yeah, the latest guidance is negative now. So, but who knows? Maybe it will turn around. Like this stock, I tried it many times. It just never take it off. So it could take off this time, but I just yeah. The other one, okay, JKS. This one is China based. And like I say, I think China stocks may have hit a bottom. I can't say for sure, but most of them look like they have hit a bottom. So this is a big downtrend here. You can see here when this slope and then when this slope. So right now, you see if it breaks up, like right now, solar is just not in my even though I draw a trend line here, I probably won't buy it even if it breaks above it. Just because I just don't feel like solar is the last group right now. You can argue, oh, it's already beating down so much, maybe it'll come back up. But there's too many other areas that are showing strength that there's no reason for me to take this risk. You know what I'm saying? Yeah.
X.
Like XLE. Yeah, if you look at XLE. Yeah, this is looking good too, right? Like it's not a new high yet, but it kind of like make new high on the base, right? So here you go, here, right? It's gap up, and yeah, it's taking off right now. So so this is probably yeah, this is a lot of people are paying attention to this. Obviously the number one growth stock in the energy sector, like that most people look at, is TDW, right? Tidewater, and you can see it has taken off and broke to new high. And this one doesn't, like I said, it doesn't give people a chance much. This is probably like right here, right? You can see I draw a trend line right here, right here. Like if you buy the low entry trend line, probably, but it didn't even build a base. It was like a really short, like 3 weeks, right, correction. Yeah, this one is in like 4th stage base now. And yeah, it just keep going. This guy keep going, and this is still a small cap, just so you know. Has lots of room to grow. Tidewater. Yeah, but yeah, the other area, like we just look at Baker Hills, Schlumberger. You can see this guy is almost near new high now. These are all the oil, gas, fuel service guy, Halliburton. These are very strong area. Yeah, so similar. But let me see, like oil stuff, like steel is also strong. Like Weatherford is number one stock right now. I've owned this for quite a while now. Not many people talk about this stock, which I find weird. This one is bigger than Tidewater, 6 billion. And so, I bought it here, and you can see I'm still holding it. It's just never give people a chance. Same thing. Like this is, sometimes when you find a strong stock, if you didn't buy it at the beginning, you're probably gonna miss the whole run because they just never give you a chance to buy. And and the reason you don't buy it, those pullback, is just too small of a pullback. You're taking too much risk. So this guy is still going. It's like an Energizer Bunny, this one. But less people talk about this stock. I don't know why. Everyone talk about Tidewater. It's still good. But the steel stuff, like no one talks about steel either. Like CRS. This is a steel alloy maker. It's not like as strong as those other guys, but it's the trend line is pretty strong. Like it's like 35-40 degree angle. And look at Friday, it just took off. TS, another one, steel producer. Okay, this one not as strong, but it has a Yeah, it reversed on Friday, so probably not as good, that one. I don't know why it reversed. Yeah, or like I have trimmed a lot of my oil stuff. Even though it looks good right now, the reason why is because many of those companies have negative guidance now, which I don't like. So that's one reason why my portfolio is very light on the oil and gas stuff. My LPG and oil, those are probably okay. Like LPG, like these are the ones that still have strong earnings growth guidance. So this one corrected, and now it's forming this base right now. So this is probably stage 4 base. And also, like you can see, right, a lot of the energy stocks are in 3rd or 4th or even later stage. The later the stages, the more risk there is. So because they have run for over a year now, you can see, right? And so OII is another oil field service. Right, so look at this one right here, built this big base. Probably will still keep running. I don't see it ending soon, but it's just that a lot of the, I mean, the oil sector is huge. There's so many stocks, but you can see, but most of them have negative guidance, which I don't like. Like last year, it was the opposite. Like 2022, I remember a lot of them were like 100% like this, right? Like 100% growth, 100% growth. A lot of the stocks are, and then all of a sudden now, like a lot of them are not as strong anymore. So, yeah. Broke out on Friday. Oh, okay, not quite. Getting closer. So here you go. See, like, I guess, let me see. If you draw the longer trend one, yeah, it still hasn't broke out. Very close. So if this move up, health could lead. See, here's the one thing I want to say. What I noticed in the last 2 weeks, excuse me, there's no clear leadership. In fact, I find that every single sector is trying to fight for this leadership. And to me, that's a good sign. Because in a bull market, that's exactly what you want to see. Is that you don't just have one sector that leads the rest. You have every sector trying to become the leader. And this is what's happening, right? Like you have health trying to become the leader. You have oil trying to become the leader. You have tech trying to become the leader. The only area that's kind of weak is probably the financial. That's the only, like, I mean, even, yeah, this one is a little bit weaker than others, but you can see it's trying to come out, what's that retail one, XRT. That one's probably the weakest one, because, yeah, so, but even this, is like, you see all these are all at the trend line. If it breaks above this is a sign of a bull market, right? So this is what I'm talking about. If we starting to see like these guys already broke out. It's like so these are the leading now. Technology is leading. Communication is probably breaking out already. So this one came back down. But you can see these guys already broke out. But yeah, XLI. So that's the industrial one. You see, this already took off, right? Some of them already took off. So if health take off and financial start to take off, man, we have a full-blown bull market, man. You know what I'm saying? So, like, the one more thing I want to say is, like, this is just the daily stocks, but I watch a lot of stocks. Like, in the last 2 weeks, I have about 600 on my stock list, and so many stocks have broken out. Like, all these color ones are the ones that have break above their trend line, like their downtrend line. So there's still lots, like there's some of them I don't follow, but there's a lot. Look at how many like color, like all these stocks have pretty much on an uptrend now. And so to me, for so many stocks to break above their downtrend line recently so fast, this is a bull market sign to me, right? So that's why I feel, that's why I was so aggressive in buying. It's because of this. Is that there's just so many stocks just trying to become the leader. And right now, like, there's so many trying to become the leader. And so from the stock side as well as from the industry group side and all that. So yeah. We'll see what happens next week.